Hello and welcome to this managerial accounting video where we will practice preparing a cash receipts budget, sometimes known as a schedule of cash receipts. Here is our information. This information is from exercise 521 in the managerial accounting textbook by Davis and Davis, second edition. If you don't have the data handy, you might pause the video and print the screen, or you could just follow along. Okay, so here's our information. In the coming year, Game Monster will be introducing its first product. And so this is going to be our first year of business. Tells us the brace is going to be sold for $12 to retailers throughout the country. All sales are going to be made on account. An expected 70% of sales will be collected within the quarter of the sale, another 25% in the quarter following the sale, and then 5% of credit sales are expected to be uncollectible. And they give us our sales budget for the following year in units. Okay, so our job is to prepare a cash receipts budget for the coming year. So we want to know when we sell these products, when will we be receiving the cash, and this information will be used later to prepare a cash budget. Okay, so the first thing I'd like to do, here we have sales in units, so let's convert this into sales dollars. So let's multiply by our selling price per unit, which is going to be $12. Right? Okay, and we're going to call this budgeted sales, but not in units. Let's say budgeted sales dollars. Okay, so this will be equal to the 25,000 times $12 a unit, and this will give us sales dollars. All right, so now that we have our sales dollars, that's the information we're going to need to prepare our cash budget. I also find it handy to make a note down here so we can refer back to it when we're going to be collecting these sales. So the quarter of sale is 70%. The following quarter is going to be 25%. And then uncollectible will be 5%. All right, we're ready to start now. So let's give this a heading, Game Monster, Cash Receipts Budget. And we'll say for the upcoming year. All right, so we're going to put columns here for each of the 4 quarters. So we'll make this the first quarter, second, third, and fourth. And then this is going to be our total. We'll have a column for bad debts and a column for accounts receivable, which are any of the sales that we made that we aren't collecting during the year. All right, so the first thing we're going to take a look at is our first quarter sales. And our first quarter sales are $300,000. So here, so that we don't make any mistakes, let's write down what we're going to be doing. We're going to be multiplying the 300,000 times 70%. Then we'll be multiplying it times 25%. And finally, we'll be multiplying it by 5%. All right. Okay, so now let's decide where they're going to go. So our first quarter sales will be collected 70% in the quarter of sales. So this is going to be equal to our first quarter sales, 300,000 times 70%. Okay, and then remember the first quarter sales will also be collected in the second quarter, and that's going to be the 25%. So this is going to be equal to 300,000 times 25%. Finally, the 5% is uncollectible, so let's put that over here in our bad debts column. This is going to be equal to 300,000 times 5%. Okay, we're going to follow that same pattern for all 4 quarters. Okay, so next let's look at our second quarter sales. And our second quarter sales are $480,000. Okay. All right, now our second quarter sales are collected 70% in the quarter of sales. So they're going to be collected 70% in the second quarter. So this is going to be second quarter sales times 70%. The rest of our second quarter sales will be collected in the third quarter. So this is going to be our second quarter sales times the 25%. And finally, our uncollectible is going to be our sales times 5%. All right, let's follow up with the third quarter sales. Our third quarter sales are $600,000. All right, so same thing. Now let's take a look at the third quarter. Third quarter sales, 70% in the quarter of sales. So this is going to be equal to 600,000 times 70%. And then the other 25% of our third quarter sales will be collected in the fourth quarter. And 5% is uncollectible. All right, finally, let's take a look at our fourth quarter sales. And that will be $960,000. You can see how this is a company that has cyclical sales, and cash budgeting comes in handy when you have a cyclical situation. Because remember, they're going to be needing money in the third quarter to buy all of the things that they're going to be selling in the fourth quarter. Okay, so in our fourth quarter, we have our sales of $960,000. 70% of that will be collected in the fourth quarter, and then the other 25% won't be collected until next year. So the 25% of our fourth quarter sales we're going to put into accounts receivable. So at the end of the year, that 25% will be waiting to be collected on the following year. And then again, we're going to put the bad debts in the year of sale. Okay. All right. So if you take a look at this here, what you'll notice is that you have two steps. When you have a 2-month collection or a 2-quarter collection, each of the columns is going to have 2 steps. Now we're missing a step in the first quarter in this particular problem only because it's the first year of business. All right. Okay, so let's put totals here. These are the important numbers that we're going to use for our cash budget. Okay. Add our totals all the way across. And we want our totals here because this is going to be our cash collections only. Okay. Okay. All right. So now we can see our total collections for each of the 4 quarters. And these numbers here will be the numbers that you're going to carry forward to your cash budget. So your cash collections for the first quarter are going to be $210, the second quarter $411, etc. Okay. Our bad debts for the year are estimated at $117,000. And where are they going to go? They're going to end up on our income statement. And then our accounts receivable is going to be carried on to our budgeted balance sheet. Okay, so that's the end of this video. I hope you find it helpful in your studies.